Today there is an important update that directly affects seniors and retirees across the United States. The Internal Revenue Service has officially implemented a new filing rule beginning this February 2026, and it may influence how millions of older Americans report their income, claim credits, and receive refunds. This change is not just a minor adjustment. It affects filing procedures, verification requirements, and the way certain retirement income is reviewed. If you rely on Social Security, pension payments, retirement distributions, or stimulus-related credits, this update deserves your full attention because it could affect the timing of your refund and even the amount you receive. The new IRS filing rule focuses primarily on enhanced income verification and benefit reporting alignment. Federal authorities have confirmed that beginning in February 2026, tax returns that include Social Security benefits, pension distributions, or retirement account withdrawals will undergo a more detailed automated cross-check process before refunds are approved. This measure has been implemented to reduce reporting discrepancies and prevent refund delays later in the year. While the purpose is administrative accuracy, seniors must understand how it changes the filing timeline and documentation requirements. Many retirees assume that because their income is simple and primarily fixed, tax season will remain routine. However, under the updated system, the IRS will now match reported retirement income more closely with information submitted by the Social Security Administration, pension administrators, and financial institutions. This means that any small reporting error, even an unintentional one, could trigger additional review. The review does not necessarily mean penalties, but it can delay refunds and create unnecessary stress if documents are incomplete or mismatched. For seniors receiving Social Security benefits, it is important to understand that the IRS already receives a copy of the SSA 1099 form showing total annual benefits paid. Under the new February 2026 rule, the automated system will compare your reported Social Security income line by line with the official SSA data before issuing refunds. If there is a difference, even a small rounding issue, your return may be temporarily flagged for verification. This process aims to prevent incorrect reporting but also increases the importance of carefully reviewing every number before filing. Retirees who receive pension payments from former employers or annuity distributions will also be affected. Pension administrators issue Form 1099 each year, and these forms are now integrated into the enhanced IRS matching system. If your reported pension income does not match exactly what was filed by your pension provider, the system will hold your refund until the discrepancy is resolved. This is particularly important for seniors who receive multiple pensions or partial year distributions. Another major element of the new rule involves retirement account withdrawals. Many retirees take distributions from traditional IRAs, 401(k) accounts, or other tax-deferred savings plans. These withdrawals are taxable income in most cases. Under the February 2026 update, the IRS will conduct automatic reconciliation between reported withdrawals and financial institution filings before processing refunds. This new layer of review means accuracy has become more critical than ever. In addition to income verification, the new rule also strengthens identity confirmation requirements. Seniors who file electronically may notice additional prompts requiring confirmation of prior year adjusted gross income or identity protection PIN numbers if previously issued. The IRS has expanded its identity protection program to prevent fraud targeting older Americans. While this measure is protective, it may add an extra step during filing. The impact of this update extends beyond income reporting. Certain tax credits frequently claimed by seniors will now receive additional verification. Credits related to medical expenses, retirement savings contributions, and refundable credits connected to prior stimulus programs may undergo more detailed screening. This does not mean these credits are being eliminated. It means documentation must align carefully with reported figures. For retirees living primarily on Social Security, understanding taxability remains essential. Social Security benefits may be partially taxable depending on combined income levels. Combined income includes adjusted gross income, non-taxable interest, and half of Social Security benefits. The new IRS system will now automatically calculate this threshold using cross-reference data. If your calculation differs, the return may be delayed. Seniors who also work part-time should pay close attention. Even modest wages can affect how much of Social Security becomes taxable. Because employers submit wage information directly to the IRS, any mismatch between reported wages and employer records will trigger review. Accuracy in entering W-2 forms is essential. Refund timing is another area affected by this new filing rule. The IRS has indicated that while most electronically filed returns will continue to be processed within standard timeframes, returns requiring reconciliation due to mismatches may experience delays of several weeks. For retirees who rely on timely refunds to cover household expenses, this makes careful preparation especially important. Another factor involves required minimum distributions. Many retirees over a certain age must withdraw a minimum amount annually from retirement accounts. Failure to report these distributions accurately can lead to penalties. Under the enhanced review process, the IRS will closely examine reported distributions against financial institution records. This increases the likelihood that missed or underreported RMD amounts will be detected automatically. Medical expense deductions are also significant for seniors. Many retirees face high healthcare costs. While itemizing deductions can reduce taxable income, the IRS now requires more precise reporting alignment for large medical deductions. Receipts and documentation should be organized and retained in case verification is requested. The February 2026 filing rule also interacts with prior stimulus-related credits that may still appear on some returns. If a taxpayer did not claim a previous recovery rebate credit properly, the IRS cross-check system will reconcile payment records automatically. This prevents duplicate claims but may delay refunds if inconsistencies appear. Direct deposit information must be entered carefully. Because identity theft remains a concern for seniors, the IRS has expanded monitoring of refund deposit changes. If bank account details differ significantly from prior year filings without explanation, additional review may occur. This step is designed to protect retirees from fraudulent redirection of refunds. State tax coordination is another consideration. While this federal rule specifically applies to the IRS, many states follow similar verification practices. Seniors who file both federal and state returns should ensure consistency across both filings to avoid complications. Retirees receiving disability benefits or survivor benefits should also confirm that income reporting matches official benefit statements. Under the new system, even minor discrepancies may create review flags. The solution is careful transcription of official documents rather than estimating amounts. Another important development tied to this February update is expanded digital communication. The IRS has improved its online account system, allowing taxpayers to review payment records, benefit totals, and prior filings more easily. Seniors who are comfortable using secure online accounts may find it helpful to verify data before submitting returns. Paper filers may experience longer processing times compared to electronic filers under this new system. While paper filing remains an option, electronic submission allows faster reconciliation with institutional data. Seniors who traditionally mail returns may wish to consider electronic filing for quicker processing. For retirees concerned about penalties, it is important to understand that this rule focuses on verification rather than punishment. Honest mistakes can still be corrected. However, accuracy reduces the likelihood of delays. Financial planning becomes even more critical in light of this update. Seniors should review total annual income sources early, gather all 1,099 forms, SSA statements, pension documents, and bank records before filing. Early organization prevents last-minute errors. Another area of interest is taxation of Social Security when combined with other retirement income. The enhanced system will automatically apply taxable percentage thresholds. Seniors near income limits should double-check calculations to ensure correct reporting. Estimated tax payments are relevant for retirees with significant non-withheld income. If estimated payments were made during the year, those payments must match IRS records. The new rule increases cross-verification of quarterly payments, reducing the likelihood of processing errors but increasing the importance of accurate reporting. For widows and widowers, filing status changes can significantly affect tax outcomes. If a spouse passed away recently, reporting must reflect the correct status. The IRS matching system now cross-references Social Security death records, making accuracy essential. Another important detail is charitable contribution reporting. Many seniors donate regularly. While deductions remain available, the IRS requires documented confirmation for larger amounts. The February 2026 system may request verification if deductions appear unusually high relative to income. Retirees who relocated during the year should ensure address updates are properly reflected. Mismatched address records between agencies can slow communication regarding refunds or notices. In summary, this February 2026 IRS filing rule does not eliminate benefits or impose new taxes directly. Instead, it increases verification, data matching, and identity protection procedures. For seniors and retirees, the message is clear. Careful documentation, accurate reporting, and early preparation are more important than ever. Understanding how Social Security, pensions, retirement withdrawals, and credits are reconciled helps prevent refund delays and unnecessary stress. This update may feel overwhelming at first, but with proper preparation it becomes manageable. Seniors who review their records carefully and ensure exact alignment with official documents will likely experience smooth processing. The purpose of the change is administrative efficiency and fraud prevention, not to create hardship. However, awareness and preparation make all the difference.